conversation about the market right now. We have Mr. Christy Mathai, the fund manager, equity at Quantum AMC, joining us on the show. Christy, hi, good afternoon. Good to be chatting with you. It's been a while since we've last spoken. But give us your sense on where you're seeing the market headed right now, given that the Nifty continues to be under pressure. We do not have much clarity on the India-US trade deal so far yet. So give us your sense on what kind of sentiment you're seeing in the market right now, and overall, what should the approach be given the markets continue to be under pressure?
Right. Good afternoon, and thanks for having me. So clearly, when we look at some of the numbers which are coming, let's say in terms of earnings, broadly looks like it's a consensus bet that the earnings sort of will improve going into the next fiscal year, and by and large that holds true because a large component of the index, depending upon the index you take, it could be anywhere from 40% to 45%, would be financials, a large chunk in the banks, which will see some bit of earnings growth as you go to the next year because the what was a headwind this year is going to turn to tailwind in terms of interest rate cuts, assuming there are no major cuts after 125 basis points of repo cut. So that remains a strong point. But just looking at some of the data points that were coming, if you were to look at any other emerging markets, at least the major competitor markets, the earnings print remains similar or better. So the marginal buyer who could, take the market higher, which is the FIIs in that sense, they have the ability to pick and choose, which was not the case few years back, and hence you're seeing some bit of selling that is in the market. But from our lens, when we look at our portfolio companies, especially given the correction or consolidation that we have had in the past, we remain optimist and we are able to find new ideas because at an index level things may not be so bad, but when you look at company wise data, the stocks have fallen quite a bit, so we are able to pick and choose in this market, and hence our cash also in the portfolio has gone down, so we remain constructive on the markets as of now.
Okay. Hi, Christy. Good afternoon. This is Harsha. Christy, more constructive with regard to large cap versus mid and small. How are you placed there?
Yeah, so again, one of the filters for us in terms of portfolio selection is liquidity. So we tend to be more towards the large cap, but of late, some of these stocks from the mid cap range are also coming given the correction. So largely in the past couple of months, maybe we would have added to a logistic name, a cash management, logistic player who is essentially in the business of ATMs. We have added to some bit in pharma where we think some of the pressures seems like too much in terms of one large drug going out of the window, but there is enough to fill in. So we have added in some of these pockets in the last few months, apart from our general position in banking and IT services and auto, which remains to be mainstay.
Okay, so Christy, from what I understand, and based on what you told us last time we interacted, banking and IT, especially on the software side of IT, you do like that space. Do you continue to be constructive on IT, given that we are seeing a lot of volatility with the rupee, and on the other side you have this entire AI-led valuation bubble in the US? What repercussion do you think that could have on Indian IT, and how are you positioned here in terms of your themes in the IT market?
Yeah, so our positioning continues to be the same. If not, we would have increased our allocation in this fall that we have had some time back. And the rationale is, it's almost been 3-4 years of absolutely no major spends coming to the services part. There is a lot of spend that is happening hardware, which is we are able to see in the P&Ls of various large institutions in US. But slowly, what we think is some of this would translate to services growth, and that should come through to the IT services also. And we would probably have more clarity as you move to the next half of the year. That said, it's difficult to call out what would come through from an AI perspective. Right now, for most of the IT services company, AI, at least the deal wins and all remains to be very small. There is some pricing pressure due to which, but in our view, most of this, people would be able to retrain as you go ahead in terms of staffing. So it would be absorbed. So we are hopeful, and the currency depreciation sort of helps, in terms of margins for most of these players, which was not the case, let's say, about a quarter back. So, given all these positive, we are hopeful that the IT should be able to turn, positively in the coming months.
And Kristi, where are you seeing flows headed at this point? Because that could be a potentially large trigger for IT, yes, but even for banking and some of the other FI heavyweight sectors. Uh, do you have an indication, a sense on how flows are going to likely shape up maybe over the next month to 2 months?
Again, it's very difficult to call out, because,
Sure.
domestic, we are all very clear, like, things are coming in and, a lot of that is getting allocated to IPOs and so on and so forth. And we don't see that supply sort of going away in any hurry. So, more companies. So it's a matter of fact what happens to FI, where why I think is a bit challenged because you have optionalities, various options when you look at the other countries as well. For example, Korea, Taiwan, equally or better EPS growth heading into next year. So I think that would be a challenging point from our perspective, whether India remains to be that, it used to be a time where there was no other alternative, but looks like there is other alternative as you head into the next year. So that remains the chief concern from our point of view.
Okay, Kristi, appreciate that view and thank you so much for your time today. On that note, we'll let you go.
Thank you.
Okay, viewers, with that, it's time to slip into a very short break on this edition of Closing Trades. When we return, we'll keep the conversation going with our experts. So you stay tuned. We'll be right back.